If you've got private health insurance, you probably feel covered. Premium out every month. Peace of mind sorted. But here's the uncomfortable truth. The average privately insured Australian still paid $1,026 out of their own pocket in 2022 to 23, according to APRA. That's the regulator that oversees private health insurers. You're paying for protection. You're still getting a bill. This isn't a few unlucky people. Australians handed over $34.5 billion in private health insurance premiums in 2023 to 24 APRA, and millions are paying for cover that doesn't match what they actually use. So today we're doing three things. Check your policy against your real usage, compare your likely gaps before you ever get treated, and review whether your extras are even worth the premium. Here's the number to sit with. $1,026. That's the average out-of-pocket hospital and medical cost per privately insured person in 2022 to 23, according to APRA. Not the uninsured, the insured. But here's the part nobody tells you. That figure is an average, which means plenty of people paid far more. On top of premiums they assumed already had them covered. 3 moves. Check your policy against how you actually use it. Compare your likely gaps before treatment. Review whether your extras beat the premium. Each one's under 20 minutes and free. So why does being insured still leave you exposed? Because private health cover isn't one simple shield, it's a maze. Policies are built around inclusions, exclusions, waiting periods, excesses, annual limits, and the gap between what Medicare pays, what your insurer pays, and what your specialist actually charges. APRA, the regulator overseeing private health, tracks all of this, and the system simply does not guarantee full coverage of your hospital or specialist bills. You assume the insurer covers most of it. The reality, per APRA, is that the average insured person still paid $1,026 out of pocket in 2022 to 23. So instead of zero, you're looking at a 4-figure gap every year, even though you've done everything right and paid your premiums on time. The better path isn't dropping cover. It's choosing a policy that actually matches the services you use. Now the second leak, and it's quieter. It's paying for cover you barely claim, especially extras, dental, optical, physio. On paper they look generous. In practice, they're throttled by annual caps, item-by-item restrictions and provider network rules. Privatehealth.gov.au, the government's own comparison site, spells this out. The value of extras can be a fraction of what you hand over each year. And the cost of doing nothing. It just keeps compounding. Nationally, premiums hit $34.5 billion in 2023 to 24. APRA. That's the scale of the recurring drain before you even count gaps and unused limits. Set and forget your policy, and you keep paying for cover that doesn't fit your life. Match it to what you actually use, and you stop bleeding money on benefits you never claim. Here's the myth worth killing. If you're insured, the insurer pays most of the bill, so you're protected from major medical costs. The fact, straight from APRA, privately insured Australians still faced an average $1,026 out-of-pocket cost in 2022 to 23. Premiums do not erase the gap, so know your gap before you book. Put the two together. On one side, $1,026, the average yearly gap you still pay per person, APRA 2022 to 23. On the other, $34.5 billion in national premiums, APRA 2023 to 24. It's a massive recurring spend, and you can still cop a 4-figure bill on top. Meet Mia. She's 38, a payroll officer in Melbourne, earning $82,000 a year. She's got hospital plus extras, cover running $3,100 a year, and she's about 12 years from retirement. Like most of us, she's never actually read the fine print. Here's what Mia found. First discovery. The number that stopped her. $1,026. That's the average out-of-pocket cost the typical insured Australian still paid in 2022 to 23, according to APRA. Mia realised insured had never meant fully covered. There was always a gap waiting on the other side of her premium. Second discovery. Scale. Australians paid $34.5 billion in premiums in 2023 to 24, APRA. Mia's $3,100 is a drop in that ocean. but it told us something. When the whole system runs on this much recurring spend, even a small mismatch in her policy choice compounds into real money over time. Third discovery. The one that stung. Her extras returned far less than she assumed. Annual caps, item restrictions and provider rules, as set out on privatehealth.gov.au, meant the dental and optical benefits she was paying for refunded a fraction of her premium. She'd been buying value that wasn't really there. Added up over Mia's 12 years to retirement, $3,100 a year in premiums, plus the average $1,026 yearly gap. That's roughly $49,500 in total outlay modelled on APRA figures, before inflation, premium rises, or any extra gap fees. That's the price of not checking. So, could this be you? 3 quick signs. You've never read your policy's exclusions or annual limits. You don't know your excess or the typical gap for a procedure you might need. And you haven't added up what you actually claimed last year. If any of those land, the next 3 moves are for you. 3 moves. Let's do them. Move 1. Check your policy against your real usage. Head to privatehealth.gov.au, the government's comparison site, and grab your insurer's product sheet. Write down the services you'll genuinely use in the next year, then hunt the fine print for exclusions, waiting periods, excesses, and annual limits. This is general information, not personal advice. The goal is simple. Stop paying for cover you'll never touch. 3 steps. 1. List the 3 to 5 services you expect to use in the next 12 months. 2. Read the policy summary and flag every exclusion, waiting period, and annual limit. 3. Weigh the premium against the benefit you'd actually receive. What good looks like. Your cover matches your needs, with gaps understood before you pay. Move 2. Compare your likely gap before the bill ever arrives. Use the government's medical costs finder. Search the procedure or specialist you might need, and you'll see the typical total cost and the average gap people actually pay. Don't assume insurance wipes out your out-of-pocket spend. Find out the real number first. 3 steps. 1. Search the procedure or specialist type. 2. Review the typical total cost and the average gap. 3. Compare that gap against your excess and your policy benefit. What good looks like. You know the likely gap before treatment, not after the bill lands. Move 3. Review whether your extras are even worth it. Open your insurer's benefits table alongside the government comparison tools. Add up what you genuinely claimed in the last 12 months, then stack it against the premium and the annual caps. If it's returning less than it costs, that's your answer. 3 steps. 1. Total up everything you actually claimed in the last 12 months. 2. Compare that against your annual premium and the caps. 3. Cancel or downgrade any cover that returns less than it costs. What good looks like. Your claims and expected benefits sit at or above the premium for that product. Why now? Look at the trend. In 2021, reform pressure built as government and industry scrutiny grew around value, transparency, and product complexity. By 2023, official reporting kept exposing that insured Australians still face material out-of-pocket costs. And in 2024, premium revenue held at $34.5 billion. APRA. Proof the recurring burden isn't shrinking. The gaps aren't going away. Reviewing your cover is the only thing that helps. Once you've acted, verify it. You should see your real claims laid out next to your premium. Confirm your cover actually matches the services you use, and if your extras return less than they cost, you've either downgraded or cut them. That's how you know it worked. Everything today comes from APRA's private health statistics, privatehealth.gov.au, and the medical costs finder. All the links are below. So now you know, insured doesn't mean covered, and you've got 3 moves to fix it. Next week, is the life insurance inside your super quietly being switched off? If this saved you from a surprise bill, subscribe. We read the fine print so you don't have to.